Yeah, so we are looking at doing a consumer application, and our view with that consumer application is saying, listen, there's a bigger superset of digital assets. And that includes Bitcoin, cashback, and rewards, and other sort of digital value, and saying, how do we put this in one application so people can get access, build a digital portfolio, and be able to unlock value.
So Bakkt, obviously there's a big build up to the launch,
yep.
And then the launch did not go, huge on the first day. Did you expect that, and how's it going now?
Yeah, launching a new contract on a regulated exchange is not like launching anywhere else. Everybody looks at it, so that's always a little bit more difficult. But if you look historically at any new contract launch, it always starts off very slow. Getting traders to be set up, I think people sort of think this is sort of a one-day process. It can take anywhere from 4 weeks to 9 months for somebody to be set up with a clearing account and ready for trading the way that they want to. So our metric was more, we had the number of market makers in there we wanted, we had the number of traders in there we wanted, and for us, our metrics that we met were successful, and we were actually really quite happy with the launch. Volume starting to come. We sort of started to see the volume grow, and last Friday was our biggest volume day with almost 2,000 lots. So it's coming, it's slow, and there'll always be a little hiccups up and down, but it's just now driving new players to come in, new institutional investors, and just other consumers to come in. We have Interactive Brokers on as a clearer, and they've been fantastic. So they get a lot of more retail participation in, so you're getting a lot more paper in. And we're getting a lot more funds speaking to us, setting up with new clearing houses, setting up with the clearing members, getting more clearing members on board. So it's a process, and a step-by-step process that takes some time.
Sure. Is the physically delivered Bitcoin part of the reason it's so difficult to get people on board?
Some of the clearers have more concerns about it being physically delivered. There shouldn't really be any concerns because it's like any other physically delivered contract, but it's as soon as you say the word Bitcoin, it's a new asset class that always concerns people and makes them start asking more questions. It's the same thing with regulators. They all start asking more questions when you talk anything about cryptocurrency. I talked to some a friend of mine, and he works in the fund industry, and he set up a crypto fund. He said everything was great until he'd go and he talked to the accountants, and he said, oh, it's a crypto fund. And they basically say, sorry, we can't take your business. And over time that's changed, and over time this will change as well. It's such a different asset class. And I think it's always harder when people can't hold something. So I always found, even understanding the oil markets or the softs markets, and when you're thinking you can hold cocoa, or you can hold any type of physical cotton or oil, you can see what it is. As soon as you can't hold it and people don't understand exactly how it works, people get scared and they walk away.
Are you also mentioned you're going to be doing cash settlement
yes.
as well?
Yeah, so on December 9th, we'll be launching a cash settled contract in Singapore on ICE Futures Singapore. What we're doing with that is it still follows the physically delivered price. So it's still a benchmark contract, so it doesn't follow an index of different prices, it follows that physically delivered price. The reason we're doing it, two things, we're doing it in Singapore to have a slightly different exchange to do it on with a slightly different regulator, and also because in the Asia space, we found a lot of people were asking for a cash settled contract. And it's trying to open or expand the pie of users. So your pie of users may be this small, but as soon as you start bringing in the cash settled contract, all the number of users start to increase. You kind of think of it this way: you have a client that is trading S&P and trading Brent on CME, and they're trading a bunch of other equity derivatives. They've always looked at Bitcoin, but they're worried about having a wallet. They don't know how to do it. They don't understand how the unregulated exchanges work. They already have an account with a broker sitting in Hong Kong. They can easily call that broker and say, listen, I want you to add Bitcoin to this. They don't need to have any access to Bitcoin. They're just all of a sudden being able to trade on the volatility of Bitcoin and on a product and still get the pricing volatility.
Was that always the plan, or was the sort of slow start to Bakkt sort of bring this idea forward?
I think those are two different questions. I don't think it was a slow start that brought it forward. It was more along the lines of we were talking to different players in the market, and this is what they wanted. So when you start talking to different players, when I actually, over the last year and a half when we've been talking to people, everybody seems to want something different, and it's trying to find a consensus and enough people to say this is what they want. And when you talk about physical delivery, everybody says, this is what we want it. You launch the contract, or just before, they're like, actually, we'd also like cash settled as well. So it's trying to figure out where the market goes and what they want, and offering them all these different tools so they can basically look in the toolbox, choose what they want, and be able to access that.
Sure. We hear a lot about institutional investors coming into crypto. Are we starting to see it, or is it just still too small a space?
We're starting to slowly see. I think for a lot of them, it's also looking at volume, whether it's on any of the regulated exchanges. So they can kind of look at the unregulated exchanges and say, we see a lot of people doing it. But on the regulated exchanges, some institutional funds will require a certain amount of volume before they can be able to trade. But we also have some smaller funds that are already coming in and starting to trade it. Their shareholders or investors are happy because it is already regulated, and they're allowing them to slowly start to come in. But it's also, I think it's the portfolio managers understanding the product and being excited about it. So often we'll go into a company and there might be only one or two people that really have the passion about this product, and the rest of them are focused on something else. And it's just people with this passion starting to get more and more people to talk about it and getting them excited. And it's a process. It's no different from the process over the last 10 years of the growth of Bitcoin.
What sort of volume of institutional investors do you expect to see using the Bakkt products by 2020, the end of 2020?
2020. I don't know. That's it's a very hard question to sort of answer. It's probably something I have no clue. I think we'd probably say what we would like to see as opposed to expect to see. Mm-hmm. I think if we can try to get, and I can't even give a number, if we just get more hedge funds getting clearing accounts and getting comfortable and start trading, and if we start having new requests and new questions, more FAQs that we have to put out, more meetings because they want to hear more about it, that's exactly what we want to see. Because the more they ask questions, it's the more they're looking into it, which is the more they're going to start wanting to trade.
In your speech, you said that one of the ways you're going to get more people on board is when they don't have to worry about the underlying technology. So how do you plan on doing that in terms of the Bakkt futures and the Bakkt exchange, and also with payments?
On the Bakkt futures and the exchange, I think over time people will stop looking at Bitcoin and trying to understand the underlying, and that's not just the futures part. I think you have to look at it as a bigger piece, and that's why Bakkt is looking at the futures, they're looking at the custodian side of it, and they are also looking at the payment side of it. And on the payment side of it, trying to move people beyond thinking about the underlying technology will grow more consumers to look into it, and it'll bring sort of the link between the institutions seeing the consumers comfortable, the consumers seeing the institutions comfortable, and you basically have a circular process of getting people to trust what you're doing. And that's why we sort of talk a lot about trust and building the trust in the product, building the trust in the digital assets.
Tell me about payments, because you guys want to take Bitcoin payments mainstream.
Yeah, so we are looking at doing a consumer application, and our view with that consumer application is saying, listen, there's a bigger superset of digital assets, and that includes Bitcoin, cashback, and rewards, and other sort of digital value, and saying, how do we put this in one application so people can get access, build a digital portfolio, and be able to unlock value into that.
Sure. So why did you partner with Starbucks?
So Starbucks is one of our initial investors, and for them, one of the things is they want to be able to work together to understand exactly how digital assets are working and how they can enhance the opportunity and I think enhance the experience for their client. Because when you look at Starbucks, it's all about enhancing the client experience.
CME and Binance, they're both in a similar space. Do you see them as competitors, or are they doing something different?
If you look at the exchange and clearing side, I guess we're all competitors. I think very healthy competitors. You don't want to be in space that doesn't have competitors, and I think consumers don't want to see that either. I think the one thing about CME is when they have their index, they settle off an index of unregulated exchanges, whereas we're very focused on making sure this has end-to-end regulation, and that's why we have the physical delivery, to make sure everything is regulated along. So when you have the CME contract, the exchange is regulated, the clearinghouse is regulated, but the underlying spot markets that they are settling their index off of are not. And I think there's also now discussion on CME gap, which I have recently talked about, which we've been recently hearing a little bit more about, and people have been discussing as well. And sort of that concern about are those markets being manipulated around the close of the CME contract?
Yeah, and that must be a big concern for institutional investors, just the fact that, whales can move markets.
Yeah, and so if people can move markets and the institutional investors don't participate in the unregulated markets, then they're subject to manipulation. And it's something CME can't manage internally because they're not managing the manipulation of their futures contract. They can't manage the manipulation of that index.
But you can?
Well, we don't have an index. That's why we have physical delivery. And so we've got a lot of processes in place to make sure, and this is stemmed back from, early trading of the New York Board of Trade. Over time, all of these processes have come in place to ensure that you don't get market manipulation, and you're constantly, market supervision, market surveillance is constantly checking out what's happening in the markets to make sure that you're not going to have these problems. And we have teams globally, so we have we have it in Singapore, in the UK, and in the US to be able to manage these markets on a 24/7 basis, pretty much.
Thank you.
Okay.